from what you see. This is the Trading Bell. We're coming to you from the trading floor at the Nairobi Securities Exchange. This is a show that will endeavor to analyze what's happening in the markets, and we'll be having insightful conversations on some of the trends we are seeing among the listed companies, as well as educating you on why you should take an interest in the stock markets. On this first edition of the show, we'll be hosting Geoffrey Odundo, the Chief Executive Officer of the Nairobi Securities Exchange. We'll be getting some interesting insights on some of the aspects that have been defining the markets since 2017 and 2018. What is in store for the markets? Join me for the conversation. Many thanks for joining us.
Thank you, Avi.
Well, it's been an interesting 2017, now we're in 2018. Perhaps with hindsight, how would you describe how the markets performed as we closed off the year, being also an election year it was last year?
Thank you, Avi. 2017 was a very, I would say, interesting year for the exchange. We started the year on a very low note. As you may recall, the index went to as low as 2,700 points. And really that was really the effect of the spillover effect of what had happened in 2016, the issues around the capital gains tax and then the capping of interest rates, and all these affected the market greatly in 2016. So we're still feeling the ripple effects of that. Come 2017, being a political year, people started carrying out their own assessments of how the year would play out, and so we saw some level of withdrawal by investors early in the year. But as we progressed towards the year, a lot of confidence sort of built up to the month of May.
Yeah.
Then we saw sort of a run up to August 8th. Incidentally, after August 8th, August 9th, we had a new milestone. The index crossed the 3,800 points, quite unlike what was expected. And that continued to perform very well until September 1st, when there was an annulment of that election.
Oh, yes. And actually, we did see the market, you taking a decision to cool off and suspend trading for a while.
Yeah, we saw a very sudden drop in the price of stocks. And normally when you cross the 5% line within a short period, you need to make a call because you need to have the market calm down and then let everybody absorb whatever information is there and then restart.
So what would have happened had you not taken that decision?
Well, had we not taken that decision, we would have seen panic selling, a lot of panic selling, and it would have led to a rapid drop in price across counters, and really which would not have been supported by any fundamental factors. So it was more of a panic. People had never seen this happen anywhere in Africa, more so the foreigners. And so we had, under the rules, we were allowed to introduce a suspension in case in our assessment the market is actually not reacting to normal fundamentals, and that's what we did.
All right.
And the good side is that subsequent to that, the market recovered and even closed better than the previous day at the end of the day. So I think the whole scenario was very, very interesting because after that we had the second election on September 26th, and after that election the market's now recovered in a very, very nice way. So I must say we have closed the year 2017 at a fair level than what we expected. And 2018 looks a bit more promising because we've seen the first 2 months, we've seen some very, very good trades taking place and a lot of positive sentiments across the globe on Kenya, and I think it's going to be good.
All right.
Yep.
And you sit at a very vantage point, Jeff. Looking forward to 2018, perhaps what's your description of how the bond market has been performing? We've seen it's been trading pretty well. What has been behind this, and is it likely to be sustained in the long run? Yeah,
the bond market has been a very strong market in my view. I think both on the primary and the secondary side. As you have seen, the government, the central bank has been raising some very good sums of money from the market and at a very fine price. So what tends to happen is that when there's a fair pricing going on in the primary, then the secondary tends to trade well. and hence people get better valuations in the secondary market. So that's what's been sort of turning around the great performance in the secondary market. There's the valuation of the various bonds are very attractive at the moment. So
all right,
good time to make the money.
Good time to make the money.
Yeah.
And of course, many Kenyans are looking forward to the Emma Kiba, and we did see it attracted a lot of participation. Really, how would you describe the uptake? And eventually, are we likely to see more products come 2018 from the NSC?
So Emma Kiba was a very unique product, the first in the world, never done before anywhere. The whole product construct was a very Kenyan concept, and so there's a lot of thinking that had to go behind that product. We successfully built an infrastructure that even today we are proud to say that the market is trading on the secondary market. We were able to access all parts of Kenya, get over 300,000 new investors onto the bond platform, which in our view democratized the way bonds are bought and sold in this country. Now, our success, we actually assess our success by the level of inclusion that we brought in.
Mm-hmm.
It was a very difficult bond to sell during the political time.
Yeah.
Because it came in around August. We had to do an extension close to September, and hence it could not achieve the targets we desired. But looking forward, we already have 300,000 people who know what a bond is now. We are talking with the government to see whether we can make this a regular program, probably in smaller tranches than a big tranche, and so that people can know that every month I'll have a bond I can save.
Mm-hmm.
So a lot of conversation is going on with government to see how we can have another issue program done this year.
Other than the Emma Kiba, what are some of the other aspects that have performed very well, especially when it comes to new listings?
We have a commodity ETF. So anybody who ever wanted to buy gold today can buy it on the exchange.
Yeah.
We have a real estate investment fund.